Hi, I'm Abhijit Kumar Dash. I I working as academia educator now and teaching to undergraduate level student in accounting, budgeting, finance, financial statement, and also I used to work industry in different position in account and the internal controller, financial controller, account payable. So and also I have a two master degree and also in master degree in finance and accounting, also bachelor in finance. So I have a industry experience at the same time as a academia experience. So I'm 40 year plus. So I'm wondering why not I share my experience as a 40 years man, what actually they need to focus and what actually they don't need to focus, because it's the middle of the age and it's so important period for to the navigate with like your retirement periods, if I say in that way. So of course, the 40 plus, it means like you have to be a little bit like make a plan to open your passive income. That's I mean, um, in terms of not completely depend on active income, because your body need to be little bit to to relax and then your money will be make a money for you. Not only the money, there are some passive uh, income investment option also you can follow. So for example, I mean, you can have a chance to invest in share market, and also, I mean, under the share market there are different option. For example, like index fund, the mutual fund, ETF, also like individual share investment, bond. At the same time, you can also invest in the real estate investment, and at the same time you have to open some YouTube channel, so because you can contribute some of your experience, your observation about you can share with the people, so what particularly I like to focus today about, like, the investment in share market, but I'm living in Denmark. I'm Danish citizen too, and I had also degree. I already mentioned I have a two master degree, one from MBA in finance, another one from MS accounting, auditing, internal control, and I have been in France also as a Erasmus Mundus exchange program. Also there also I have done the semester in finance. So if I focus to particularly the investment, and I will actually, of course, geographically, there are certain rules will be different based on the country you're living. And I'm living one of the complicated regulation, especially people who want to invest the money in the share market, because it's a high tax country, and and of course you have to be uh, scanning by yourself what is the tax condition in your country, because tax is at the end is a big factor. Of course you can pay the tax from your return, of course, and at the same time there are some investment is actually a little bit risky. It's like a year-to-year investment. That's also you have to be cautious about that. I mean, if you're living in Denmark, now, of course, I have investment in share investment in Denmark. If you are in Denmark, I think it is more appropriate. At the same time, who actually not living in Denmark, you can also the general idea, general framework is same. The index fund is consist of, many company. Many company all together. The fund manager make a index fund. At the mutual fund, there are some of the index fund is a passive investment. It's a low cost investment. So as a if you are more active in your job, you have active income, so you can invest the money in index fund passively. And also, like, there are some mutual fund, like this fund manager actively maintain that it's a little bit higher cost than the passive index fund. So you can choose that. But as a person, I am actually, of course, I invest most of my money in index fund as a passive investment. So they are low cost. And low cost is the one of the big factor. At the end, you have to pay the money to the fund manager for this particular year. So, and it will be compounding for many years. At the time you have to pay huge money based on your the whole return. So you have to think about that. I have also some mistake. I still have that, so I'm gradually correct, try to be updated, try to be corrected. And I also have some one to investment index fund, all are for actively managed by fund manager, but it's a quite low investment. So I recently figure out, so I go into sold and invest the money to other part. So this is the index one. At the same time, you can able to index in ETF, exchange traded fund. But there the big problem is most of the ETF, if you in Denmark, you have to pay unrealized gain tax. And this is the worst part and worst scenario in Denmark, because of the discourage the people are investment in ETF, because ETF are all are mostly exchange traded fund, and you have to pay unrealized gain tax. What does mean that unrealized gain? Well, every particular year, for example, I give you one example, like in the beginning of the year or the middle of the year, you bought the fund, it's a 5,000. At the end of the year, it's a 8,000. Even though you haven't realized that, even though you haven't sold that, the money, the increased money, you have to pay tax. So this is the tax also, some the benchmark, is actually depend on your the income tax, the tax you paying for your active income. The same tax you have to pay for certain amount, and there are, after certain amount, you have to pay the 55% and 42% tax. So so this is so complicated in Denmark, especially for unrealized gain. But for the index fund, you will pay the realized gain tax. So you will be sell your index fund. At the time you have to pay tax. The tax percentage is 27, and after certain amount, I don't exactly remember the amount, of course I figure out, I let you know in my description all the figure, all the numbers. I haven't actually not, it's just like a roughly make this video. And you have to pay 42% tax, and all the dividend you have to pay tax 27%. It's not only for index fund, for the individual share you have to pay also 27% tax. And of course on you sold, you have to pay realized gain tax. So it's okay to pay a little money for the realized gain compared with the unrealized gain tax is more worse. So uh, I had this last year and I pay high tax. I pay about the quite a big amount of money as a tax for that, but I did not lose any money. The money I paid from my for my gain, so it's still okay for me. But then I can sell all this ETF and then I invest the money in the in the index fund. So now the individual share is quite risky because you have to be figure out, um, the, the about the company's management, valuation, and also like competitor, oncoming competitor, because maybe you bought today and tomorrow the price is gone, so you cannot, so you have to wait for a long time to get it back, and some of the company not even get it back, getting down and down because there are other competitor that coming the product with the best price, best quality, so you have to be cautious about that. It's so risky actually if you not um, educated, and if you don't know about the company, you don't have a time, or you don't have an analysis, or you don't know the knowledge what you have to do before investing any particular company, is better to choose the index fund. Why is which is reduce your manage risk management or risk, because there are more than 100 or more than 500, for example like S&P 500, there are five largest company from USA, they are mostly covered, and all the risks will be distributed within the 500 company. So it's a low risk compared to you choosing one particular company. So I not able I able to invest, but I try to skip that. It's I mean, I'm not updating every day. I'm not a daily trader. I'm not an option trader. I'm not a uh, how to say sorting. So I have actually thinking for long run, so I'm a long time investor. I'm assume I'm a long term investor. So that's I will recommend to you if someone are not able to manage the time and not able to have a, of course that's also, that before starting the individual share investment, you can start with index fund, and then slowly enrich your knowledge, and then try to be slowly start, but I not even start yet, so I don't think actually need that. Okay, so that's also the another option. Bond, I mean, bond is one kind of, is a fixed amount of money you will get it, but it's a low risk, I mean low interest, so at some point you're not able to cover your inflation. Do you know the inflation? Every year price of the product is getting uh, uh, increase, so you have to be also consider that, for example like 2% or 3% every year, the inflation rate is rise, so you have, if the bond you only getting 3%, so it's like this year you money not making any money, so sometimes making lower money, so you reduce the money and decreasing the valuation of your money, so you have to consider about that. And at the same time I can say that of course there are time tax advantage account in Denmark. I think is if you go in all over the Europe, there are some kind of option that make it, actually that make it for who are paying tax, it's only for those people. This tax advantage in Denmark is called Aktiesparekonto, and every person this year is 174,000, if I notice, about to approximately you can invest, so is you have to only have to pay 17% tax. So is, I mean, compared to 27 and 42% is lower tax, so you can do that, I mean, and that's also in the, and the Akshaya Sphere Conto, you can go for index fund, ETF is quite open, you can invest whatever you want. And also you have some pension, pension investment is a 15.3%. This is the also the unrealized gain tax. Every year you have to pay 15.3, but it still is lower than 17%. So there are three or four kind of investment, how to say, option you have. The normal is custody account, is I already mentioned, 27 to 42%. There are some amount limitation. Akshaya Spare Conto, there are also amount limitation, it's a 17% tax. And also ETF, you have to pay unrealized gain tax. Also Aktiesparekonto also unrealized gain tax. Pension also unrealized gain tax. But the custody account, you don't have to pay unrealized gain tax, only realized gain tax. All the dividend you have to pay unrealized gain tax. So you have to make some strategy, so and then create some passive income from the investment. So and this is the one, how to say, one option. You can also invest your time and passively, and you in the long run, your money will be compounding. Then you'll get like financial freedom. There are some movement is called fire financial independence, which are financial stability. So you have to make a plan for that. It's quite passive. You can focus on what you want. At the same time, you can focus your active job, book reading or singing, what you actually desire at the same time. But the money will be work for you. Money will be compounding along the way. Of course, before choosing the fund or share, you have to be a little bit like research by yourself. So this is the one option for today, is a personal finance related to investment, share investment. Thank you so much. I hope you understand me. It's no, I don't actually mention any specific figure, but I try to describe you with the numbers in the description part. Thank you so much. Bye.